As the U.S. markets are currently closed here on Thursday, October 16, 2025, we're looking at the final closing price for Omeros Corporation, ticker OMER, from yesterday's session on Wednesday, October 15th. The stock finished the day at $10.42 per share. This wasn't just a modest gain, it was a seismic eruption, a surge of $6.32, which translates to a jaw-dropping 154.15% increase in a single trading session. Now, the immediate expectation when you see a move like this in a small-cap biopharmaceutical company is a binary event, a flip of a coin that just happened to land on heads. But the reality of what this means for Omeros is far more profound than a simple one-day windfall. This isn't just about a stock price doubling, it's about the entire corporate narrative being rewritten overnight, shifting the company from a high-risk research outfit burning through cash to a commercial-stage enterprise with a validated, life-saving product. This move was triggered by the news that the U.S. Food and Drug Administration, the FDA, has finally granted approval for the company's lead drug candidate, Narsoplimab, for the treatment of hematopoietic stem cell transplant-associated thrombotic microangiopathy, or HSCT-TMA. This is a rare and often fatal complication for patients undergoing stem cell transplants, and until now, there were no approved treatments. This approval single-handedly de-risks the company's most valuable asset and provides a clear path to revenue. Most investors, especially those who primarily trade megacaps like Tesla stock or Nvidia stock, look at the biotech space with understandable caution. The prevailing belief is that it's a minefield. For every success story, there are 100 failures. Companies that burn through investor capital for years only to fail at the final regulatory hurdle. Omeros was for a long time seen through this exact lens. The company had received a complete response letter from the FDA back in 2021 for this very same drug, which is regulatory language for a rejection. That event crushed the stock and cemented the expectation in many minds that Omeros was a broken story. Investors using platforms from Fidelity to Robinhood likely saw the massive drop back then and wrote it off. But the deeper reality is that the company's management persevered, worked with the agency to address its concerns, and resubmitted their application. Yesterday's approval wasn't just a reversal of fortune, it was a testament to persistence and the strength of their clinical data. It challenges the simple narrative of biotech being a lottery. Sometimes it's a marathon of navigating complex regulatory pathways, and Omeros just crossed a critical finish line. The market is now being forced to reevaluate not just Narsoplimab, but the entire underlying science and management team at the company. Let's break down the mechanics of yesterday's extraordinary stock movement. A 154% gain does not happen in a vacuum. The trading volume was simply colossal, exploding to over 140 million shares. To put that in perspective, Omeros' average daily volume over the past few months was closer to 2 million shares. This indicates a massive influx of buying pressure from every corner of the market. Sophisticated traders on platforms like Interactive Brokers and retail investors on the SoFi Invest app were all trying to get a piece of the action. A significant portion of this explosive move was almost certainly fueled by a violent short squeeze. Given the company's previous regulatory setback and the high cash burn rate typical of this sector, Omeros was a target for short sellers, investors betting the stock price would go down. When the FDA approval news hit the wires, those shorts were trapped. They were forced to buy back shares at any price to close out their losing positions, and this frantic buying added jet fuel to the rally. Every buy order from a covering short seller drove the price higher, forcing more shorts to capitulate. This cascade effect is what turns a strong gain into a historic triple-digit surge. It's a classic case of expectations and reality colliding. The shorts expected continued failure, but the reality of an FDA approval created a nightmare scenario for them and a dream scenario for long-term shareholders. Institutional investors, many of whom may have been sitting on the sidelines, are now also forced to re-engage. Portfolio managers who use Fidelity Wealth Management or similar services will be taking a hard look at Omeros, reassessing their valuation models now that a significant revenue stream is on the horizon. So what does Omeros Corporation actually do? Beyond this headline-grabbing drug, the company has a broader focus on discovering, developing, and commercializing treatments for inflammation, complement-mediated diseases, and disorders of the central nervous system. Their business model has historically been twofold: generate revenue from their commercial ophthalmology product, Omidria, while using that income and raised capital to fund their extensive and ambitious research pipeline. Narsoplimab was the crown jewel of that pipeline. It's a monoclonal antibody targeting mannan-binding lectin-associated serine protease 2, or MASP2, a key component of the complement system, which is a part of the body's immune response. By inhibiting MASP2, the drug is believed to interrupt the inflammatory processes that lead to the devastating endothelial damage seen in HSCT-TMA. This approval not only validates this specific mechanism of action, but also provides a halo effect for their other complement-focused programs. The company's past is a story of struggle. Investors who have held the stock for years have endured immense volatility and disappointment. The 2021 rejection was a low point, and the stock languished, reflecting the market's deep skepticism. Many investors who use self-directed platforms for online investing likely sold their positions long ago, tired of waiting. But for those who held on, their thesis has been vindicated in the most dramatic fashion imaginable. This is why investment help and thorough research are so critical in the biotech sector. The difference between a massive loss and a life-changing gain can hinge on one regulatory decision. Looking ahead, the narrative for Omeros shifts entirely. The central question is no longer, will their lead drug get approved, but rather, how successful will the commercial launch be? This is where the next chapter of the expectation versus reality story will be written. The bull case scenario is that Omeros executes a flawless launch. Given that HSCT-TMA has no other approved treatments, they face a captive market with significant unmet need. Analysts will be modeling peak sales projections that could run into the hundreds of millions of dollars annually. If they hit or exceed these targets, the revenue will transform the company's financials, making them profitable and providing ample capital to advance the rest of their pipeline without needing to dilute shareholder value by issuing more stock. Furthermore, Narsoplimab is being studied in other indications, including atypical hemolytic uremic syndrome, or aHUS, and IgA nephropathy. Any positive developments on those fronts could serve as powerful future catalysts. Now that the company has a major approved drug, it also becomes a much more attractive target for a potential buyout from a larger pharmaceutical company looking to add a new revenue stream. An acquisition offer would likely come at a significant premium to even yesterday's elevated price. However, there are still risks to consider, which forms the bear case. The reality of a drug launch is incredibly complex. Omeros has to build out a sales force, navigate the labyrinth of insurance reimbursement and pricing, and educate physicians. Execution risk is now the primary concern. A slow or fumbled launch could cause the stock to give back a substantial portion of its recent gains. The initial euphoria could fade as the market demands to see tangible sales figures. Investors will be scrutinizing the first few quarterly earnings reports for hard numbers on the launch trajectory. This is a common pattern for biotech stocks. After the initial approval pop, the focus shifts to the hard work of commercialization. While many investors may be excited by the prospect of a small, agile company bringing a drug to market, others might prefer the perceived safety of a diversified product like the Schwab Intelligent portfolios, which minimizes single stock risk. This is the new tension: the market's high expectation for a successful launch versus the operational reality and challenges of bringing a new high-cost therapy to patients. Before we go further, I want to hear from you. Comment below if you've ever held a biotech stock through a major FDA decision. What was the outcome? It's a unique experience for any investor, and I'm curious to read your stories. The path forward for Omeros will be defined by its ability to transition from an R&D-focused organization to a commercially successful one. The company's balance sheet, once a source of concern due to cash burn, is now set to be fortified with high-margin product revenue. This financial strength will allow them to accelerate the development of their other pipeline candidates, such as OMS 906 for paroxysmal hemoglobinuria and